Good morning, traders. It is Thursday, November the 1st. Hopefully, everybody had a good Halloween evening. Anyways, taking a look at the charts, we got the US dollar index, and yesterday I was pointing out how the market looked like it was forming a very similar pattern to what we saw previously, which was this pattern right here, where you come up, you push to new highs, you get a strong multi-wave down, and then you see kind of a dead cat bounce, which leads to lower prices. Now, if we take a look at the chart, you can see we've more or less started to get that. We've had that first move down in overnight trading. Yesterday we saw the bounce up, and then yesterday morning we saw a continued move down, very similar to what we saw here. And we came down into the support zone across these this consolidation, this pivot low, and we're seeing a mini bull flag back up here. And again, now we're more or less trading in this kind of area, and more or less we've got three surges to a high, came up right into the 61% retracement, pulled back. More or less we've had this bounce, pause, and a mini bull flag, measured move more or less up into resistance, which is right across these tops where there's lots of shares traded or volume traded, and now I have a feeling we're going to see the US dollar actually start to work its way down, probably back down to the lower end of this range. So if we do see that, then we are going to see stocks and commodities start to rally, and it's falling in line with where the cycles are and support levels where a lot of key indexes and major stocks are trading. So taking a look at commodities real quick, let's jump to crude oil. Here's the crude oil chart, continuing to kind of trade and hold ground at this red support zone. Looks as though it's trying to form another mini rounding formation bottom here. Overall, in the grand scheme of things, I'm not that excited about the crude oil play. While it may have an opportunity, it shows a rounding bottom here, and it's trying to hold up here. Overall, I'm still not a big fan of crude oil prices. That being said, if it does pop, and a stop below this pivot low here, if it does pop, it would probably push all the way up to around the 90-91 area, where it'll likely stall out. It may stall out between 89 and 90, but overall it could spike right up into the 91 from this level. But overall, I'm still not a fan of it. Selling volume is still there, and I'm just not seeing a good setup at this time. Taking a look at natural gas. Here's the natural gas chart. We had a contract rollover, so we saw prices jump for the new contract. Overall, though, if you were to look at a natural gas ETF, I'll just pull up UNG for example. You pull up UNG, and there's no price jump. Technically, it would look like it was trading up here. If the price actually really did rise, it'd be trading up here, forming a little flag. But overall, we haven't really kind of got that pop in the ETFs, which I know many of you were actually short or still are short natural gas, and you weren't able to trade the first 2 days of the week, and you saw the big jump up in natural gas. Some of you are in a panic, but I mentioned you shouldn't be too worried about it because it's contract rollover. It shouldn't affect the ETF, which it hasn't. That being said, we are in a strong uptrend for natural gas. It's not really picking up speed to the downside, and the natural tendency is for prices to go higher. So if you are short, I'd be very cautious, as at any time really natural gas could pop and start another move up. Looking at gold and silver, here's the 4-hour chart of gold. Yesterday we started to see it kind of work its way up. If we just zoom in a bit, kind of came down to a little bit of falling wedge area and formed a little mini kind of basing pattern. Started to pick up speed yesterday and this morning to the upside. Overall, if we jump to the daily chart, it's not that bullish of a pattern. This type of pattern here is more of like a mini pennant, and gold has a tendency to naturally want to kind of hook up and then sell off. So it builds this little tiny pattern, and it does it on all time frames, and then you'll see it slowly kind of get squeezed up. Really, you can see there isn't a whole lot of volume. The current day volume here isn't proper for gold futures, but overall it'll squeeze out of this pattern and come up and hook into the next resistance zone, which is right across here. So it could have a little bit more squeeze higher, and then from there it sells off and does its final leg. So this could be more or less a 1, 2, 3 or an ABC wave correction coming down, and we see one more flush in gold. But overall, it is down. It was down in the support zone. It's getting a little bit of a bounce, and really this week is kind of hard to gauge what's going to happen to things simply because of the way the markets and traders are affected from Hurricane Sandy. Looking at the silver chart, pretty much the same thing. It's just kind of hooking up here, running up into its next resistance level, which is this kind of level here, this pivot low coming across. There's another pivot low and a pivot high, so it's naturally running into resistance there, and really no big volume behind it. It's just kind of running its way up now. I wouldn't be surprised if things squeeze a little bit higher still, but we could see continued weakness in the metals. Looking at GDX and the GDXJ, the gold miner juniors, had a huge day yesterday, which generally front runs the price of gold. We saw about a 3+% move jump in gold miners. That's a very bullish sign. It has somewhat broken out of this little down channel here, and I'm going to keep my eye on it. Overall, it looks as though it's trying to start a new run, and if it is breaking out of this pattern here, then we could see a pretty big rally in the coming days, which we may want to get on board. Looking at the bond chart, here's the bond chart. You can see we've slowly been breaking above this down trend line. We broke once, we broke twice, and this time we came down to it yesterday, just touched it, and it actually acted as support, which is also a pivot high from this previous level, and we actually got a bounce off it this morning. If we zoom in, you can see it's got a mini bull flag. More or less, you can see we had a nice move, mini bull flag, and technically it looks as though it wants to even go higher, but overall it's formed another mini bull flag up at this resistance level, is pulling back. I wouldn't be surprised if it squeezes up near this previous pivot high, which is up at this level here, and it would kind of form a little bit of a rising wedge into that area. And I think eventually we see I think money right now is pretty scared. It's moving into bonds, it's moving into utilities. The utility sector is moving up, and if you compare utility sector price action to the broad market, usually when there's fear near the end of a move, you see money move into bonds, you see it move into utilities, which are more steady income earners and dividend paying, and that money kind of squeezes up, and eventually you'll see money flow out of those and back into equities as the rally starts, but they're kind of delayed. So things are starting to come together that I think the broad market, the equities, the SP 500 and NASDAQ are ready to move higher. If we just take a look at the chart here of the SP 500, what you can see is more or less we've been down here consolidating, chopping around for a few days, really not getting any stability, any strength. Overall, we've got this intermediate, this pink cycle down at the bottom, and we're working our way that we're working on our more or less 5 or 6 days of trading sideways, and more or less a short-term cycle. It could roll over and do one final surge. And usually when this intermediate cycle, this pink line is in the bottom, is when you get some of the biggest moves, when it's lingering down there. And right now we've had one cycle down, and this bounce, this cycle that should be going up really isn't going anywhere. And when the short-term cycle turns down, we could get that final flush, really shake the market out. We'll see this panic selling here jump up into a high level of 9 or higher, even into the 20s. And once we see that, if we can get that final flush in the equities market, it would probably trigger the bottom, and we could see the next major rally to the upside. But really, if this level's not broken, we haven't really shaken the market up enough to really spook people out of the long positions. Taking a look at the SP 500 futures to see where we're trading this morning. Here's yesterday's trading session. In pre-market, we were up pretty high. We started to sell off before the market opened, continued to sell off into around noon, and then we had a little bit of a afternoon counter trend rally. Usually in the morning you get a trend in one direction, the afternoon you get a counter trend move, and it's usually on light volume. Light volume favors higher prices, and then you'll see at the end of the day, you'll see the continuation of the early morning trend, and that's more or less what happened yesterday. Once the futures closed yesterday, prices continue to drop really quickly over the next 10 minutes, bringing it right back down to yesterday's lows. Now in overnight trading, we've been chopping around sideways here, and just recently with the US dollar starting to pull back, we're starting to see equities push back up to yesterday's close. So we're more or less flat on the session for the open this morning, and but looking at the volume here, you can see strong volume. Sellers are still in control. You've got high volume selling, and then when they let up and in the morning, there's a natural tendency for stocks to rise, and of course when the big sellers aren't in there, they're finished balancing for the day. The light volume just moves the market back up, and then at the end of the day is when you get the last wave of selling or volume, and the big guys want to unload or rebalance during those high volatility times because they won't move the market as much. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.